Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Rupa and Company Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikas Agrawal, Whole-Time Director. Thank you, and over to you, sir.
Thank you and welcome everybody, and thank you everyone for being with us today. I'm joined on call with our CEO, Mr. Dinesh Toda, and CFO, Mr. Sumit Khawala is also there. At the outset, we are very happy to deliver another year with increasing growth as we build upon the momentum generated over the last 2 years. If you recall, at the beginning of the year, we had a forecast, we had a commitment of doing a top line growth of 15%. And with an EBITDA margin of around 18% plus 18 to 19%, with a PAT margin of anywhere between 13 to 14%, where our top line we did a growth of 12.3%, which is little drop to what we have committed. But EBITDA is around 18.2%, quite in line with what we have committed. Same with the PAT, around 13%. And we are quite happy with the results what we have delivered, other than just the top line. Top line, we have taken a hit because of some policy changes in last quarter, which Dodaji will apprise you. And coming to quarter 4 specifically, we did had some pressure because of the increasing yarn prices and all. Because of that, we have seen flat growth with some drop in volume. And there is an increase in salary and advertisement and some product mix, largely because of that. So this is regarding the performance. And coming to our point regarding the Dodaji exit, what we are seeing in the news everywhere. Dodaji and I had requested the exit some time back, but we requested him to stay back till the board meeting. And Dodaji is exiting because of the personal reasons. We wish him all the best, and we are thankful to him for all his contribution and look forward for his continued association with the group. In fact, he is helping us with the appointment of new CEO also. So he is a part of core team to drive that, as he understands the business, understands the family well. So he is still part. Coming to CFO appointment, we have promoted Mr. Sumit Khawala as a CFO because he is with the company and his promotion was long time due. So that's a part of promotion process. Mr. Ramesh, of course, is a part of promoter family. He is with the family. He will be able to spend more time on the overall macro activities of the group. So that is one. At the same time, I am also happy to announce we are strengthening the board. So we appointed Mr. Sunil Chandiramani, who has joined as a board of independent director. So he has a vast experience of 25 years with Ernst & Young on the advisory business. He brings a vast experience on finance, corporate, digital transformation. So we look forward to his contribution to the board. Moving to our next year forecast and all, we are quite confident we'll be able to grow anywhere a top line of 15 to 18%, keeping the EBITDA margin of around 18%, which we did this year also. And in terms of with a PAT margin of 13% plus. In terms of competition growth and all, I am sure that will be a question. But we need to see, last year we did a growth of around 35%, where the competition grew around 10 to 12%, 14% somewhere. So our CAGR growth of last 3 years in terms of top line or profit is better than what the competition has done. And as said, we are quite confident going forward also we'll be able to maintain a growth rate of 15 to 18% with a EBITDA margin of 15% plus. With this, I request Dinesh ji to please share the details with the
Thank you very much, Vikasji, and good morning to all the participants. So in Q4, I think the industry faced headwinds in the form of COVID wave early in the quarter, coupled with the raw material prices increase. I think the inflationary pressure has been seen in cotton and yarn prices, which are our key inputs, material. Even though we have taken a price hike, not that everything will be passed on, so we have seen, cost pressure to extent of 1% this quarter, and that is shown also in gross margin. In Q4, we have also incurred higher expenditure on advertisement, and also that is part of our strategy in terms of brand scaling, and there are a lot of incurred happening. We also have a new brand ambassador, Kiara Advani, this quarter. So there are things which is taken in this quarter. We also saw some increase in the employee cost, which is basically part of the hikes and others. But despite all this, there we maintain our margin on a full year basis. As Vikas said, we end up at a 1474 on a top line, which is 12.3% growth. The top line has impacted by the demerger what happened on Oban. Oban business has a policy which used to be an SOR model. That SOR model has now changed to what we do in Rupa, which is outright model. That impacted the top line by about 23 to 24 crore, and that impacted almost the percentage to 2% on an overall number, 1.5% to 2%. Otherwise, we are very much what we have talked about, 15% growth rate. On a margin, on a EBITDA on a year, as Vikas said, we are on a 18%, 18.2%, which is very much aligned with what we have said earlier in the year. And PAT also is 13%, very much aligned to what we have talked about in the year. Coming to quarter four specific, our top line is the flattest top line, or the volume down almost 10%. I think clearly what we are seeing also in terms of margin, the margin has impacted, the PAT has impacted by 3.7%, driven by only three factors. One, the material cost, which is impacting about 1%, 1.1%, that is driven by the mix. We are seeing a significant challenges in two product line. One is the outerwear, which is a bumcham, which is we are seeing a degrowth of 26% on volume, and the premium side where we are seeing a degrowth of 10%. Besides that, there is a degrowth on a bra. So all these are a high margin product and has impacted the overall margin by 1%. The other side is the advertisement cost. Though the year advertisement cost is almost on a in line with what we have said, the quarter we have increased by 8 crore from last year, and that is impacted almost 1.5%. Employee also has impacted almost 0.8%. These three combined actually is 3.7% what you see in the PAT in terms of drop. But as I said, we are higher than the plan till December, and with this year, this quarter four, we still at what we have talked about 13% PAT margin. Coming to the working capital, it's a challenging working capital cycle right now with the, in the quarter four. We are seeing working capital days 186 days. Used to be 165 days last year, same time. The increase is mainly on inventory and debtors. The good news is debtors, which is 553 crore, is already dropped to 440 crore now. So there is a drop of 110 crore by now, and we're expecting that to be flattish at below 400 crore by the quarter end. Inventory also, we will see a significant drop this quarter. We have built some of the inventory with the cost of the cotton what we have, and we wanted to just make sure that we have enough stock in place. At quarter one also, we are looking to grow 20% plus. So we have built some of the part, and some of the part the inventory has been built because we expected to grow the business by almost to 5% on a volume, whereas we end up at a 10% negative volume for the quarter four. So that also has impacted the inventory, but that both things will be sorted out in quarter one, because as I said, in the debtors is already below 450, and inventory is also coming down by this quarter end. So we should be able to manage. We are expecting this year, as we go forward to back to 160 or below number of days. So the target is 150 days, but we should be at 160 days as far as number of days is concerned on working capital. Coming to the next year, as Vikas said, we are looking to grow at 15 to 18%, driven by mainly the 6 pillars. If you see this year also, the 6 pillars have grown 31% in terms of the major 4 key strategy which we talked about in our presentation also. The key focus states, we are growing 26%. Export has grown more than 60%. Modern trade has grown also in line. Next year also we are seeing almost 49% growth coming from these 4 pillars, which will helping us to overall grow faster than the market. And we are expecting that numbers what we are committing 15 to 18% to deliver back of this strategy. As far as breakup is concerned, premium is about 9 to 10% of our number, economy is 30 to 32%, and mid premium is 58%. There is no significant change in terms of one particular area where degrowth or growth happening. But yes, the economy has grown, and there is the impact on mid premium to 1.5%. Rest all almost similar line what we have. So again, coming to back on my resignation, I have requested for this some time back, and we have agreed that we will be, I will be moving post the board meeting and the Concall. Again, I want to thank Rupa management and the board of directors for all the support, and it is one of the very fruitful and most learning experience I have in my career. I've been working in multinational company, in Indian company, multiple places. But I must say that this is one of the best experience I got and a great place to work in that sense. So with that, I will be opening to question answers, what you have. As I said, couple of clarifications I already given. As far as margin drop 3.7%, that is driven by three factors. Top line I talked about, where it is majorly is a mixed game, where the 2 product line, which is a majorly on Bumchum, which is a affiliature, and premium, which has impacted the overall number. And working days, as I said, it is coming under control. Yes, Q4 end we are going up, but it's going down. So we are open to questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohit Ori from Progressive Shares. Please go ahead.
Hi, sir. Good to see the company take a small step towards professional management and trying to tackle the issue with succession planning. I would say that the presentation which is uploaded is also quite nice, and it is a good presentation sent across. I have 2 questions which is related to the growth capex of the company. First one, if you can take us through any growth capex plan which is related to our property at Bangladesh.
Bangladesh we had planned just because of COVID in last 2-3 years, it was unable to take off. But we are reviewing that again, and hopefully this year we'll be able to start some business activity there.
So you'll be investing the same
amount. For partner there, so it's in process.
We'll be investing around 20 odd crores or so.
Yeah. Once we finalize the partner, then that's the minimum requirement to invest.
Okay. And this could give us what sort of turnover can come from this then?
It's difficult to comment, but anywhere between 50 to 100 crores is quite achievable, and lot of duplicates sell there with the brand name Rupa. So Rupa is quite a popular name there. So we are looking for some partners, and the delay is just because of COVID. So okay. This year probably we'll be able to start some business there.
Okay, second question is related to the growth capex, related to the property which we have at Domjur. So would you like to share anything on that, some progress over there, or in terms of the growth capex?
So that's our part of every year process, which we spend around 30 to 40 crores, which is with stitching part, making part, and increasing cutting capacity and warehousing capacity. So that's part of the regular year-on-year process. So nothing extra than that.
Apart from that, nothing on the growth capex.
So nothing at the moment.
Okay, sir. Thank you.
But for achieving a growth of 15 to 20% year on year, so whatever infrastructure is required, so that with 30-40 crores, we achieve that.
Okay, sir. Thank you, sir. Thanks, sir.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Yeah, good morning, sir. Thanks for the opportunity. So for the full year FY22, what was the volume growth and value growth we have seen across the categories?
We have a value growth which we talked about 12.3%. Volume is 0.5, so 0.5% is the volume growth, and majorly the growth what you are seeing is driven by value.
So then, why for the Q4 we have not seen any value growth, sir?
Volume growth?
Q4 you are saying?
Yes, sir. For the Q4 we have not seen any value growth.
Top of volume, so volume is about 10% down in Q4 and flattish on a value.
Okay. And sir, despite the degrowth in the volume, our subcontracting cost on a YY basis was higher. So any particular reason for that?
Subcontracting is more related to inventory. It does not impact the profitability or gross margin. It is much more to do with inventory. So inventory is up, so subcontracting will be up as such. So it is gross margin still remains same.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Devanshu Bansal from Emkay Global Financial Services. Please go ahead.
Yes, hi. Thanks for the opportunity. Sir, this 10% volume decline in Q4, is it a postponement of demand as you expect 20% growth in Q1?
So Q1 we are expecting a solid growth of 20% plus. If you remember, we started last year with a drop of value terms. Last year, Q1 also is not good for us. So we are expecting minimum 20% growth here. Yes, some of the sales has going to move to Q1. We expect that maybe a little bit, but I think the major drop we are seeing couple of category where we see that again the demand should come back as the summer season starts. Particularly Bumcham last year, Q4 was very good. This year we are seeing a solid degrowth there, as I said, 26% degrowth there on volume. That we feel that as the summer season started, we will see a good growth coming off Bermudas and others, which is what we are expecting.
Sure. And you indicated like in Bunchams there has been a volume decline. So this category particularly was seeing very strong growth trends over the past few quarters. So can you elaborate as in what exactly are the reasons for this decline?
The reason after COVID, there was a huge jump in athleisure and all, but this quarter we are seeing a little softness in the demand, and largely because of the sudden rise in prices also. So there is a more than 15-20% rise in hiking prices. Mm-hmm. And also probably the last year, the 2-year base of athleisure was very strong. So this year was strong, but going forward, I think again good growth should come.
To add to what Vikas said, we are launching couple of new product line also into the Buncham category, which will also ensure a solid growth as we go forward.
And this I believe is across the industry, not specific to us. So this is because of athleisure is also done bad this year, and the outerwear thermal has also done bad because winter was from December, so we took some hit there as well. And if you see that increase in inventory because of the thermal as well. We have reduced what we have targeted, so we took a little hit there. So thermal also did little bad this year. So the extra inventory is there because of thermal as well. That also contributes there.
Sure. Sir, if higher inventory, some of part is due to thermal, so how do you plan to utilize it in Q1? So there was one comment made as in utilization of inventory in Q1.
Yeah, so inventory is driven, as you rightly said, thermal, yes, we have our 40 crore stock of thermal, which is definitely going to liquidate post June. But as far as Q1 is concerned, we will see a liquidation happening in architecture. As I said earlier, there also the good inventory numbers are there, and also in the premium. So I think we will see a significant drop on inventory, and AR has already, as I said, already moved 110 crore down from what we have. So we are already seeing that drop to coming to 400 and below 400, which is the normal waiver what we have. inventory will be slowly and steadily will move down.
One clarification we want to give on the investors community, because on TV there was some interview and we see some news coming up that we have replaced the CEO, which is the wrong news. So CEO has resigned and CFO we got promoted, Mr. Sumit Khawala, as a CFO, and Ramesh ji will be a whole-time director, who is a part of promoter family. So CFO is promoted and CEO has resigned. So just to clarify on the news which has come on the CNBC TV 18.
Sure. Sir, of this 15 to 18% growth target for FY23, can you sort of help us with the breakdown between volume and pricing?
So we are expecting 8% on a volume, on 10% will be giving a value on 18% basis. Accordingly, you can take it to 15%, but on 18%, 8% will be volume and 10% will value.
And for 15%, that it would be through value?
It will be 7 and 8 almost.
Okay. And lastly, I could not understand the UDAN policy change. So if you can elaborate a bit on that, it would be helpful.
So UDAN business, when we started the GT business on a SOR basis. Modern trade also on SOR basis. When we demerged in a Rupa, we don't do any SOR business, which is sales on return basis. So what we have decided that we will be moving this business into the right way, where we have asked to take the material back from GT business and giving them again fresh stock, because we are keeping stock with them on SOR basis, and there are some changes in a policy which we have done in terms of payment terms and others. So there is a significant changes happen in the policy post the demerger, and now we are putting together a policy and places which is aligned with the Rupa, what we have. And that will impact, as far as temporary basis, that has impacted because we have taken that return. But now we will be giving slowly and steadily the GT business outright model, product, which will be slowly and steadily. This year we are expecting to make it a 25 crore as far as top line is concerned. But yes, this year we have taken the hit because of that model.
And this channel was largely catering to premium segment, or it was catering to the economy as well?
Premium and super premium.
Sure, that's helpful. I'll get back in the queue. Thank you, sir.
Thank you. The next question is from the line of Manish Poddar from Motilal Oswal Asset Management. Please go ahead.
Yeah. Hi, sir. Thanks for doing the call. So just one question. If you could split the inventory between finished goods and work in progress?
What is that?
Can you split the inventory which you are building, basis finished goods and work in progress? Let's say raw material inventory and finished goods inventory.
Just 1 minute. You can ask the next question. In the meantime, I'll come back to you.
This is the only question I have.
Okay.
No worries. I'll take it with Sumit offline if you all don't have the number handy.
So we have work in progress 163 crore, finished is 341 crore, and raw material is 74. So that making it a 580 crore. So almost 25% on work in progress.
So you said 160, 340, and remaining
163, 341, and 74.
And we have built up the stock also, inventory also, because the yarn prices and all the commodity prices are increasing also. Raw materials prices are increasing, what we see every day. So that is one reason as well, because the stock is. Yeah, we haven't stopped the manufacturing, but we have done some extra purchase so that we can control the future increasing prices. So that is one reason as well.
Okay, fair enough. Thank you so much.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1 now. The next question is from the line of Ankit Kedia from Phillip Capital. Please go ahead.
Sir, just a clarification on UDAN. The 23 crore impact was for the quarter or was it for the full year?
On the full year, this quarter, I think impact is about 13 crore.
Okay. And you said even FY23, the business from Udaan would be 23 to 25 crores. So all the material which we supplied to Udaan last year, we got a return of that?
So it is over a period of 2 years in that sense, because we said the model has been continued to be in a SOR model when Udaan was standalone earlier. Now we align that to, as I said, completely on a Rupa practices. And same way we have taken back some of the material which is there in SOR basis on the modern trade. That also has been taken back. So now we have a complete outright model that will impact on the immediate basis, but over a period of time, that is the right model which we believe in, and that is going to drive us into EBITDA positive this year.
So if the inventory was 2 years old, which we have taken back, so has that inventory been written off from the cost as well, or only from the revenue?
We have taken a provision of 25% on the inventory, which is impacted on the profitability.
This is largely to align with the Rupa policy. So under Rupa flagship, what we do is largely to align with the overall policy of the company. And where the stock prices has increased 20%, still we have taken a provision of 25% to ensure there is no further hit on the balance sheet.
Now the second question is regarding athleisure. What is the revenue contribution from athleisure for us, and how has been the demand for athleisure in the last quarter?
I told you earlier, I think in the scout, the athleisure has a problem in quarter 4 with a 26% drop on volume. We have a very good quarter 4 last year on athleisure. This year we are seeing a significant drop. Having said that, we are seeing a good momentum right now of quarter 1 and quarter when we are expecting again a solid growth, because the summer is where the things will be, and now the demand is back. So hopefully this quarter we will see again back to a good growth number on athleisure.
So the drop is on back of the high base of last year, right? It's not due to the consumer demand or the price increases which we have taken in the system?
You're talking about athleisure, right?
Yes, sir.
Yeah, athleisure again, as I said, base was high on the quarter 4, and we're seeing a degrowth there.
But at the same time, on an overall basis, we did a growth of
overall we are seeing a growth on a value of about 6 to 7% and volume minus 6% on a yearly basis.
And sir, in a core business, given the way yarn prices have moved in last 3 weeks, what kind of price increase can we expect in couple of quarters from here? And do you think the consumer is postponing buying, or he's downtrading given the price increases we are witnessing?
Of course, the increasing prices is a challenge, but as we are into essentials, innerwear is essential, so we are quite optimistic. Achieving a growth of anywhere 15% to 18% should not be a challenge. With the opportunities in export, in domestic market, in our women's wear, premium wear. So, and we are investing a lot on the brands as well. We have taken a new brand ambassador, Kiara, for women's wear. With the recent, with Ranveer Singh, we are doing some new campaigns. So the demand will still be there. We can postpone the purchase maybe for a couple of months and all, but on the yearly basis, I think we'll see a good growth.
And sir, what kind of price increase do we anticipate this year in the system, given the way yarn prices are there?
As I said earlier, out of volume and value, I talked about 8 and 10. So that is what we are expecting. The 10% will be value rise. And already quarter 1, we have a price increase which is 40 rupees to 35 rupees to 40 rupees, which is basically about 4%.
So we already taken a 4% price increase in quarter 1.
All the company has taken 4% approximately this quarter.
Right. And sir, can you just clarify what will be the percentage of your athleisure sales?
Athleisure is approximately 8% of our sale. Bumcham is about 110 crore to 112 crore sale out of that, so about 8%.
So what qualifies for such a big volume drop? Even if I adjust for Bumchams, a 10% volume drop in the quarter, even if I adjust for Udaan, which was, provisioned of, and Bumcham, still in the core business, we have seen a high single-digit volume drop.
Yeah, this quarter, as I said, has a slow quarter for us. But as I said, quarter one momentum looking very bright with mid 20% plus rate. But if you really see on a year, we talked about 15%, we are almost there. And both in EBITDA and PAT also, we are almost there. So there is no big difference than what we have committed, except the one impact which is impacted almost 1.8% to 2% on our number. We are very much aligned what we talked about. And next year we are more than confident now with the some of the growth areas are delivering results. I think the 15 to 18% looks pretty solid what we see.
Sure, sir.
And probably if we have seen a quarter four minus 10% growth, we'll make up a good growth in quarter one as well. This is because of the rise in inventory prices also. So maybe distributors also want to relook their purchase, maybe from quarter four to quarter one. But on the demand side, I think we'll be able to cater the market, and demand is not going down what we see. The demand will keep increasing, and these numbers should do well in quarter one. And in the yearly basis, what we have committed, a good growth, we see quite a good growth with a lot of opportunity in the market.
Sure, sir. Thank you so much, sir.
Thank you. The next question is from the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah, good morning, sir. Thanks for giving me the opportunity. So my question is on the market share. So have we lost any market share to our nearest competitor?
I think if you see absolute this year, yes, in that sense. But if you see a 2-year CAGR or 2-year total, then you will see that we are getting there.
So how are we planning to, tackle with this competitive intensity? So adding more brands into your portfolio would help, or expanding your reach, or how you are planning to tackle with this competitive intensity what we have seen in last 2 years.
Our thing is driven by 6 pillars I talked about earlier. I think that clearly we are expanding our market, and we are seeing right now this year we're expecting that particular segment of market which is huge opportunity for us, what we call X factor, where the growth opportunity is 100% plus and year after year. This year we're expecting that to grow at a 50% number. Last year we grown in 21-22 we have grown 26% only, but this year we should be doing much more because the base has been set. The other side we talked about the modern trade, where we are expecting again to grow 60% plus. Export we are expecting this time 70% plus growth. Government business again growing 60%. This year again grown 67%. So these are the key focus area. Along with that, premium segment we are focusing very hard with the new product launches and all. We are expecting premium to deliver over 18 to 20% plus growth rate. We are also expecting, as I said earlier, on the overall thermal. This year, first time after 2-3 years, we had a slow thermal number with a drop of 14% on volume. If you remember, last 2 years we are growing 25% plus. This year we are expecting thermal to grow at 30% plus minimum with a lot of new product addition in plan. So clearly, I think that there are enough and more we have in terms of place where we feel that we should be growing minimum 15 to 18%, if not more.
Right, sir. So can you give us a breakup between what is the unorganized and organized play in the athleisure and the thermal segment?
There is no data which is available as such, but normally 40 to 45% is organized and 50 to 55 unorganized. And that is going to have more and more moving towards organized with the price of cotton going up. You will see impacting the smaller player more. Though it is a slow process, but it will be moving.
A repeated question to the earlier participant. So how are you planning for the price hikes? Like we have seen that cotton prices are going up significantly. In fact, in the last few months, it has gone up substantially, and it is affecting the margins of most of the textile players. So for you as well, as you have taken 4% price increase in Q1, so how easy it would be to take another round of price hike if this prices continues to go up substantially in the coming months?
So price rise we are not expecting to go up further, maybe 1 or 2% more. But just that first half last year versus now, already price, even you take March price versus April price of last year, the price is already 6-7% up. So the base is already lower, and your current price also it will give you a value growth of 7 to 8%.
Okay, fine. Thank you, sir. Thanks for that.
Thank you. The next question is from the line of Devanshu Bansal from Emkay Global Financial Services. Please go ahead.
Yes, sir. Thanks for the follow-up opportunity. What is the working capital reduction target across inventory days, receivable days for us for FY23?
So we are planning to end the year. I will just give you end the year inventory at 400 crore, debtors at 400 crore, and creditors 235 crore. A working capital days of 155 days. Worst case 160 days.
Sure, that's helpful. And secondly, I wanted to understand what is the contribution of softline business and how has this category grown in terms of volumes and value in FY22?
So FY22, we are seeing a good growth on leggings, which is growing at 22% and value 29%, but we are seeing a significant challenge in the bra and panties. And that's something we are working right now from the point of view, some of the market where we are seeing some challenges. But overall, the soft line as a business, we are seeing a degrowth of, in a year basis, 3% and value growth of almost 10% because of mix, because legging has a much higher base in terms of price, so it has impacted positively in that sense.
And what is the contribution of this segment to overall top line?
Overall, it will be almost 8%, just the soft line. Those are overall women category, we will have about 10 to 11%, because there are some product in a different category also, not in the soft line. But this particular segment, we are expecting 25 to 30% minimum growth, with legging growing at a much higher as we go forward.
Sure. And secondly, I wanted to put forward a request if you can sort of in the PPT give us a broad breakup of the category-wise growth and volumes going ahead. As other participants, as other players have also sort of started giving the category-wise growth in their PPTs.
Sure, we will come back on it.
Does that answer your question, Mr. Bansal?
Yes, it does. Thank you.
Thank you. Participants are requested to please press star and 1 to ask a question. The next question is from the line of Vishal Bagadia from Rupa Asset Managers. Please go ahead.
Good morning, sir, and thank you for the opportunity. So my first question is that what kind of percentage of top line are we seeing for ad spends for the year? And how would we see that going forward for the next couple of years?
We are looking at expenditure to 5.5 to 6%. So it will be range between 5 to 6%. This year is below, touching the 4.7%.
But on absolute term, which is 61 crores, we are planning a spend of around 90 crores on our absolute term. So which is 50% rise on the base.
Okay. Yeah, that would be great, sir. And so my second question is, if we see our top line, if you're growing by about 15% as you target for this year, and next year also we see the same growth, we can see about 1,950 crores coming in. So can we say that by next year, FY24, we can reach a 2,000 crore top line?
That's the plan.
And going forward, if we are looking for a higher target in the next couple of years, say about 3 to 4 years, so what kind of growth or top line can we target?
Like with the given opportunity, as we have discussed earlier also, especially with the unorganized being 40 to 50%, and with the increase in raw material prices, so where this is our base, which is economy and mid-premium, other than that, leisure, export, all other, we have spoken at length. So growing around 15% plus, 15 to 20%, 18% is not a challenge. So we see a huge opportunity. So year-on-year growth, 15 to 20% is what is our target. So 50% we commit, and above that, whatever we can do better.
Okay, so that would be great. So that was all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Sriram from Sincere Syndication. Please go ahead.
So thanks for the opportunity and very good set of numbers during these tough times. I just want to get a clarity on the three matters. One is that, so in the last week, if I look at the raw material prices of cotton have been elevated to skyrocket levels. It has been raised as close to say 70 to 80% in last 6 months of time period. So in that sense, how do you look at the softening of prices in cotton? Is it near term? Is there any softening of prices coming down?
It's difficult to comment, but we might look for some government intervention which will control the prices, what we see into steel and other things. So we are hopeful government might intervene something with the cotton prices as well, which will control the yarn cotton prices. We are hopeful.
Okay. So with regards to adding up about 50 new stores over there in FY23, so what is the kind of growth capex that you have been allocated, that is you plan to allocate, sir, for this financial year?
It's all franchise models, so we don't have any capex required for that. It's completely franchise model.
Okay. What is the current utilization of the existing facility, sir?
What is that?
What is the current utilization of the existing facility?
Correct utilization, around 80%.
80%
of the production capacity for
how do you look at the traction, sir, for the next couple of quarters? Because if there is a slowdown in demand, or how does things are going forward?
Slowdown in demand, we don't see much slowdown in demand. But as whatever is required to do a growth of 15%, where we required a volume growth of 8 to 10%, we have enough capacity, so that's not a challenge.
So 8% of volume growth and 7% of relocation at what we are planning to do, right, sir? If my understanding is correct.
Yeah, 8 to 10%.
Can I expect the margin should be about between 16 to 18% in EBITDA level for FY23 and FY24?
Yeah.
Yeah. Fine, sir. Fine, sir. So one more last question. I've been joined a little late. I just want to understand about the resignation of CFO and CEO. If you can elaborate things in a short term, it will be better, sir.
I'm not sure about the question. Can you repeat, please?
So I've been joined a little late. I will not hear the initial commentary from the management. Would you comment about the CEO and CFO resignation and reappointment of CFO and potential appointment of CEO in future near term, and how does the things are planned out? So they should be better to
understand. Things are well planned and things are smoothly hand over to the management, and we are looking for a new CEO where Lodaj is helping us. He's actively the part of the core team. So that will see any impact there in terms of business. Okay. So business will keep doing and growing.
Thank you. Thank you. Thanks for this talk to me. Thank you.
Thank you. Before we take the next question, reminder to the participants to ask a question, please press star and 1. Next question is from the line of Suruchi Parmar from NX Wealth Management. Please go ahead.
Yeah, hello. Am I audible?
Yes.
Yeah. So I want to know about the growth prospects related to softline business, and you have appointed Kaira Advani for it. So what is your vision and what you feel in coming 4-5 years your softline brand will be look in your company as a whole? What are the growth prospects in that?
Look, in women's wear, as we see, we are not doing as well what competition is doing. So we see a huge scope there. And we have built up a strong team in terms of our marketing sales team, and Kaira is also there. We have a strong product line as well now. So we see at least 25 to 30% growth year on year for next 5-7 years at least.
Okay. And what you feel is your market cap in that softline business will be in coming years, like in down 2-3 years line or 4-5 years line?
You're asking for growth or the top line?
Regarding the softline business, I'm asking.
Plus growth in next 3 years, 3 to 4 years.
Pardon? I couldn't hear you.
100 crore plus brand.
Okay. And what do you feel like your overall revenue will be, what you are targeting in 4-5 years?
Overall, on the company basis?
Correct.
So as we have said, 15 to 18% is for next 2-3 years. So 2,000 plus in next 2 years, and we still feel we'll be able to maintain a 15% growth for next couple of years.
Okay. Thank you so much, sir. Thank you so much, sir.
Thank you. The next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
Hi, sir. Thank you for the follow-up. So question related to the export market. You intend to take 5 times from here in next 2 years or so. So how do you intend to do that? Have you added some more clients, or are you looking at some contract manufacturing, some players in UK, US, or Middle East?
It's a mix of both what you said. We are expanding markets, both African as well as Middle East, as well as some other market like Bangladesh and all we talked about. And also we are looking now on a contract manufacturing opportunity as long as it is aligned to our profitability path. Yes, we are looking both. And this year already, as I said, 57, but next year we are targeting 70%. We also hired a very senior person to lead our export, who is being in textile industry for more than 20 years. And he is now leading our export business, and we are expecting this to grow much higher percentage because the base is very small, and we feel that we should be 100 crore in next 3 years' time.
Okay. So in terms of these 4th generation SAP suite, that is SAP S/4HANA, how can these implementation of these systems help us in terms of is it supply chain, or how do these help us?
So it will be helping both on a supply chain, automation, inventory management big time, and also ordering process. All these 3 key elements out of that, besides the distribution side, definitely it will help us overall working capital as well as speed up the process.
Okay. So with these, can we assume that after 2-3 years, the margins will start picking up towards 21, 22, or 23% or so?
We continue to be looking at acceleration on margin, and margin going to be driving not by cost control but also the mix. And the product we have in the 6 pillars are all a high margin product line. So overall, I think it should be giving us a little more momentum on margin. At this point of time, next year, we feel that it will be flattish percentage basis. But going forward, yes, we will look for.
Historically, it was anywhere between 12 to 13%, but going forward, yes, 18% plus, and year on year, we should do better by at least 0.5%. So that is our target.
Okay, sir, that helps. Thank you.
Thank you. The next question is from the line of Shalini Gupta from East India Securities. Please go ahead.
Yeah, good morning, sir. Just wanted to check how the economy, mid and the premium segment are growing in the quarter and for the year. So
economy has growing little faster this year. It is growing at like overall we are growing 12%. The economy grown 14%. The premium has a growth about 10 to 11%, and mid premium is average about 10 to 11%. So mix of both giving us 12.3% growth.
Okay, and sir, I mean premium segment was a segment which you were expecting will grow very fast because the way the Indian economy is shaping up. So are you a bit disappointed with the premium segment performance?
Definitely, we are expecting premium to grow at 18 to 20%, which does not happen this year. But what we are seeing that we are able to, thing has done on a lot of stuff in terms of sales processes, and we have also added our retail network this year, which has not impacted immediately in terms of growing this year number. But as we go forward, there are 2 ways we will be seeing growth. One, we are going to add some product line there, which is going to give us positive further growth rate, and also some of the retail network which we are increasing. So mix of both, we should be getting us 20 to 25% growth in next year.
Okay, so just wanted to understand thermals and athleisure, how they are growing for you?
How?
thermals and athleisure.
Yeah, what is the question?
So, like, how are they growing for you?
I have already talked about that this year was a bad year for both these products from the point of view what we are saying in the past. Thermal, for the first time after 2-3 years, we are seeing a degrowth because the season has just started much later than expected. And thermal, even you have a winter in February, January, it does not give you results. The early winter always helps in terms of thermal business. So that has impacted the business. As far as athleisure is concerned, as I said, quarter 4 was we are seeing a dull quarter from the athleisure point of view. But what we are seeing quarter 1, the momentum is pretty good, and we are expecting a return on high growth in athleisure in quarter 1 with the summer coming.
Okay, I mean, sir, athleisure, there is a point of view in the industry that the peak growth we are already past the peak growth phase, and from here on, the athleisure growth may not be so good. What is your sense on this?
I think Bumcham is the, I will say, only brand in that segment which is uniquely placed in terms of price point. And we feel that we will be in a spot where we will be taking some of the big guys' market share also when it comes to Nike and Reebok, which is a much higher price range. We are seeing a good opportunity as we build the product portfolio both on athleisure and casual wear. I think we will see continuous momentum. This year is exception actually.
But what we have asked, doing a 30-40% growth might be a challenge, but doing a 15-20% growth, that is a minimum market size increase, so that will keep happening.
Okay. And sir, my last question, sir, you were quite gung-ho on your kids and women's wear. So if you can say how that has performed in the quarter.
So quarter as well as year, the legging business has done well. We are seeing a good growth of 22% on a volume and value of 29%. But where we are seeing a challenge is the bra and panties, which has impacted to some extent in some of the big markets, particularly Bihar. But as I said, quarter 1, we are expecting this to return to a 30% plus growth rate, both mixing of both the things. So we should be seeing a good result as we go forward on women's wear.
Thank you, sir.
Thank you. The next question is from the line of Gaurang Sapre from HDFC Bank. Please go ahead.
Hello, am I audible? Yeah. Good morning, sir. Thank you for the opportunity. My question was on the financials. So while our company has reported a healthy profit after tax, but the cash flow from operations were negative primarily due to the inventory and receivables buildup. So while you have addressed that partially, just wanted to ask your view on whether we are expecting positive cash flow from operations for 1H FY23, and will short-term debt come down in that line?
Yes, as I said, debtors is already down by 100 plus crore by now. So definitely it will be a positive cash flow. With the inventory also we are trying to control. Because you said some of the inventory also has been built as a price also. We know that the price has gone up, so the yarn has a lower price point, but we have built the inventory. So definitely cash flow will be positive at this quarter onward, and we are working towards that.
Okay. Thank you so much.
Unusual time, we haven't seen such kind of price hike in raw materials. So increase in the inventory stock and number of increase in working capital is largely because of that. But in coming quarters, when things are normal, things should subside and should be come to normal numbers again.
Okay, sure. Thank you so much.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to them for closing comments.
So again, thank you. From my point of view, again, this will be, from my point of view, the last call on. But as I said, I'd like to thank Rupa management, board of directors, for really giving me one of the best experience in the organization. I have been work on MNC most of my career, but I must say that this is one of the best place to work, and it is great to see this business going next level as we go forward. And hopefully we will be announcing, the management will be announcing soon the new CEO. And I will work on helping whatever way I can to get as early as possible. I think the momentum is pretty good as we go forward, and we are pretty much on track to grow at 15-18% with a good EBITDA number. I'll just hand over to Vikas with that.
Thank you everybody for your time. And as we have said, we see a good opportunity in the market, and next year projections are doing a top line growth of 15 to 18% with EBITDA margin of 18%. Of course, business will continue, and though Lodha will not be there physically, but yes, he'll be with us. And as we have said, he's helping us with the appointment of the new CEO also, searching of a new CEO also. And we have Mr. Koala as a CFO, who's working with the company from last 10 years. So you can touch base with him for any numbers, for any query, if any specific queries are there. And thank you once again for all your time. And wishing all the best to Lodha again. Thank you.
Thank you. On behalf of Rupa and Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.